Good morning, folks. It's great to be back here again and wonderful to be back on the air this week. Looking forward to just chatting about interest rates, week of the Boston Marathon, right?
That's right. A lot of runners out there today doing their thing. Go! Go for life!
What do you mean? You're supposed to be out there, Carol.
Yeah, I like to watch it on TV. I always find, can sit with my popcorn
Sounds like
and watch
fun.
people run. Yeah.
Well, it's fantastic in respect to just finances. Rates are still very low, but I have to say, very blessed with the calls. I very much enjoy my time with our listeners, and not only the questions, just the time that they spend to share with me what is going on in their lives. And I was chatting with Carol about that, and it touches me, and then I have learned a great deal. But folks, please remember, there's so much going on right now in the economy that we really want to make sure that we are making the best possible choices when it comes to savings. And at the end of the day, your biggest savings really is your mortgage. So at least look at the mortgage statement and see what your savings are going to be if you went into a 4% rate or a 3% rate, which most mortgage offers, with rates dropping daily. And ask the question.
And you can easily do a calculation for people, right? So they can give you some numbers and you can say, well, here's what you'd be looking at monthly in savings if you went into this particular interest rate range. Yeah.
And I think that what we try and do is we are very active in trying to save money. We have households and families and kids, and we do want to save and be proactive. However, sometimes we're putting a lot of energy into things that may not save us as much in one shot, such as a mortgage payment, where by reducing your interest rate, you're saving $250 or $300 a month. So that's bigger than any grocery bill that you would be looking at, because you can't get rid of a kid to save money on food. Kids eat.
I tried.
I know you did, Carol. Didn't work. It's there is no return policy on that. But it's something to think about. And I always say to folks that our number is there. It's a 1-800 number. We're available 24/7. And I truly enjoy having these conversations with our listeners. They've made me a richer and much more blessed individual just to be able to share information that is factual.
Yeah. Well, and two, you've always said it's important not to miss a mortgage payment. So sometimes people are looking at their monthly bills and they're saying, something has got to give. I can't do everything. But you're saying, be sure the mortgage gets paid.
Exactly, because the biggest situation that occurs often enough is, what do we have for emergency funds? And most folks don't have that savings, because it is all about things happening in life, whether your kids need education, so you have to pay a little bit more for college or gear, or things that are happening in your life, so you're constantly putting money in and not being able to save anything. And often enough, when you do have an emergency, let's just say a hospital bill that needs to be taken care of, you decide to not make the mortgage payment. And that is something that you should not ever, ever consider doing, because that's your safe haven. I say to folks, that's your home. You want to make sure that your family is safe and you're financially able to meet that obligation. If you feel in the next 2 months or 3 months, or currently you may be hitting that road, then you should definitely call me and see whether we can do something to get you a lower interest rate, lower payment. And it's really not even the mortgage that's hurting you the most. It's the credit cards, or the auto loan, or the student loan, or other debts, maybe private loans, payday loans. These are the day-to-day facts that Americans are facing, and there are ways to consolidate.
The number to call Sarah is toll-free, 800-662-9550, and she's always happy to talk with you about your situation. And it may be that you could save even $200 or $300 a month off what you're paying right now on your mortgage. So it's worth looking into. It's worth at least the phone call. I wanted to ask you this. I had a situation this week.
Another situation?
Another situation. I don't know why it's me, but okay. So we had a credit card that we were closing out.
Right.
It was on automatic payment with a checking account that we also closed.
Oh, okay.
So we closed the credit card in February. As of yesterday, I received a notice saying you have an outstanding balance on that, and now we've added all these late fees to it. So now it's, I think it's about $50 more than it would have been to pay it off in February.
Right.
We were just unaware that that was attached to that. So I haven't had any notices. I haven't had any information. Right. We would have paid immediately had we known.
Right.
So I said to the girl, I said, can you please take off these late fees?
Right.
She said, no.
No.
I'm afraid we can't do that for you, ma'am. Do you want to pay the whole thing today?
I don't think so.
Of course I did. So how is that going to hit my credit score? What am I in for?
Well, ultimately, it really is about what was on, as in the amount.
Okay.
And certainly, if I just wanted to backtrack a little bit, did you pay that credit card off, and they're saying you didn't, and that's why they attached late fees?
No, we
Okay.
thought that it would be paid off because we thought it was coming out of our other checking account. So
Now, here's what's the most damaging to your credit report. Mortgage, if your mortgage is late, then you have 100 points down on the score.
Okay.
If you're looking at credit cards, if let's say you have a $10,000 credit card and you owe $10,000, it's the same as if you owe $500 on a $500 maximum limit credit card.
Okay.
So depending on how many times you've been asked to pay it, if this was the first notification and there's a $50 fee, really isn't going to hit you that hard. I mean, it's not as if you've been delinquent multiple times.
No.
And I mean, those hits are usually 20, points, if anything. And in your case, I wouldn't suspect it to be a major issue.
phew.
Exactly, but it's when they're calling you, and
Yeah.
here, there's situations where they've had actually folks that have paid, but they've sent it to the PO box. So it sits in that PO box for weeks, and then it goes into a processing center, and then they're calling you and saying, "Where's your payment?"
Right.
We're going to ding you for this, this, and this. However, you want to make sure when the check clears that when it does clear, you can show them proof that you had made that payment when it was dated, and it was actually their fault that they didn't collect that, that check from the PO box in a timely fashion, so that you don't get dinged. But I would always ask the question and definitely ask them to waive, because these fees they get pretty heavy duty. They can be $30, $50.
Yeah, and quickly could. I mean, if it went another month, I don't know how much we would have owed. But it was a very, very polite letter, though. It was
I'm
very
sure it
nicely
was.
worded. We really want to help you out. We're concerned about you. Is everything okay?
And can we add another 20% on credit card fees?
So if everything is okay, then we're just going to keep charging you. So that was, well, I'm glad to know it's not as serious as I had thought. I could see my credit score plummeting down the drain, but that's good to hear. That's a relief. But these are the questions, folks at home, that you can always ask Sarah. She can give you the answer, and it's free advice. She's not going to charge you for helping you out a little bit over the phone. The number is 800-662-9550. How are the mortgage rates looking? Are we going up, Sarah?
The last couple of weeks have been pretty much going between 4.5% to 4% to 3.875, and the advantage that we provide basically is because we work with wholesale lenders. So we're not in the retail market. So when you're looking at wholesale, we watch the market daily, and with us, we price it at par, which is usually the rate that is offered for the day, and we can lock it. There's no cost involved. You go into a local bank, that rate that they offer is there for 30 days or 60 days, and it's usually a half a percentage point or a percentage point higher. And that doesn't sound like a whole lot more than having our rate, but it makes a huge difference, because a typical mortgage is $300,000, so you could be paying $200 more a month.
Yeah, it is significant. Those little numbers turn into big numbers when you multiply them by thousands. That's the problem.
Right.
So now, what if somebody's looking at an adjustable rate mortgage right now? Would they have an adjustable rate? Is this a good time to change that into a fixed? What should they be doing?
I think that we kind of have a society right now where you hear this element of fear in the media, and you and I know how the media works. And obviously, I love television and I love radio, and we just need to kind of look at the facts versus what is really, not happening. You can get finance right now with our company at Mohsin for 620 scores. You can get adjustable rates, and they are great in respect to what your future goals are. If you're looking to live in the house for 5 years and you're going to move, then you obviously may want to be in an adjustable rate. But when you look at the reality of where adjustable rates are now, they're equivalent to the fixed rates.
Yeah, that's interesting. That's a new world, isn't it?
It is, because the things that were occurring in the 90s and early 2000, there were reasons why you would look at adjustable rates or home equity lines, which are second mortgages. And the main thing that it offered was this great ability to have a 3% rate and have a lower payment, even though it's adjustable, and that was the advantage, that you had a low rate. But rates right now are in the 3s, and they're fixed.
Yeah.
So I recommend folks to really look closely at what their goals are.
Yeah.
There's nothing wrong with an adjustable rate. However, you have to also understand that with an adjustable rate, there is a penalty if you decide to refinance somewhere between that 1 to 5 year period.
Right.
And you may change direction and not move.
Right.
And therefore, you're holding an adjustable rate when you could have just had a fixed rate, which is very close to what the adjustable rates are right now.
Okay, so there's another calculation you might want to run by Sarah when you give her a call, 800-662-9550. What's the trouble with HELOCs, Sarah?
Well, HELOCs are literally, as I've said, they're home equity lines of credit. And I think that it's a great marketing pitch because people don't understand what that means. It really means that it's a second mortgage.
Is there any difference between that and a mortgage? I mean, why do they call it something different? Just because they want it to be appealing?
It sounds less intrusive and it doesn't sound like a mortgage. And therefore, you don't feel like you're attaching a loan to your property, a lien against your property. If someone walked in and asked me, I want an equity line, and if I sat down and explained to them that, listen, this is a line of credit, which means it's a lien against your property, which means it's a second mortgage, then I think your reaction, then natural reaction would be, why am I doing this when I can just literally refinance my home and maintain the same mortgage and just get some equity out of the existing mortgage and not have to worry about a second mortgage?
Yeah. Because that's the way it appealed to me, was when I heard about it, I thought, well, that means that because I'm such a good customer on my mortgage, they're saying, you know what, we'll give you a little extra money, go spend it, you can pay it back. It does not sound like mortgage number 2.
It's mortgage number 2, and it applied very well in the 90s and early 2000 because of the fact that rates were 6, 7, 8% on your existing mortgage. So a second mortgage or a home equity line, very attractive, 3% adjustable, interest only. I come from a very conservative school of thought, which is back to basics, where we all need to go back to, which is get a fixed rate. You don't have to have worry or anxiety about whether the rate's going to adjust, and not have to live beyond your means. Because at this point in the game, we have one true advantage, which is, and it is the perfect storm. You have rates that are an all-time low, 50-year lows. They're going to go back up because of the economy, which will hopefully recover. And you can consolidate your existing debt and get it taken care of in one shot. I don't want you to keep coming back to Mohsin and saying, well, I want to refinance a second, third, fourth time. I want you to refer us to your family and friends, not have you come back as a client. I've had that happen.
Yes.
And I just worry about that because I want this to be a learning experience. And I want folks to understand that here is an opportunity to understand your finances and then get a low interest rate, pay off your credit card debts, your student loan debts, and just start fresh.
And this is a great opportunity to do that. And it's better that you do it today than tomorrow. So we're telling our listeners to call Sarah today at 800-662-9550. And we're also asking you, our listeners, to tune in again tomorrow because Sarah has a special guest for us tomorrow.
Looking forward to it. Stay well, folks.